Hi everyone, in the previous videos you learned how to identify supply and demand on your charts, and you learned how to draw the zones properly using different candlestick patterns as basic candles. In this video you will learn how to differentiate between strong supply and demand zones that you should trade and weak supply and demand zones that you should ignore, because you are not going to trade every single supply or demand zones you find on your charts. So to determine the quality of a supply or demand zone, I developed a set of criteria by which supply and demand zones can be evaluated, such as the strength of the move, the freshness of the zone, the breakout of previous levels, the minimum reward to risk ratio, and the alignment of the zone with the higher time frames. In this video, I'll cover the first criterion, which is the strength of the zone or the strength of the move. To determine whether the zone is strong or not, you should take two factors into consideration: the time spent in the zone and the candle size of the move. Let me give you an example. This is the Euro-US dollar for our chart. This is a clear rally-based drop supply zone. When you identify the zone, you should pay attention to the beginning of the move. As you can see, the move was quick and strong, and the candle size is big. These two elements showed us that there is a bank or a financial institution behind this strong move down. Because retail traders cannot move the market this way, but banks or financial institutions do. So in this example, we can see that this move is strong because the market didn't spend too much time in the zone and the candle size is big. Let me give you another example. This is the Aussie GPY 1 hour chart. This is the first demand zone and this is the second demand zone. Let's start with the first demand zone. Look at the beginning of the move. It is quick and strong. The candle size is big. So this is a strong demand zone. The second demand zone has the same qualifications. The market didn't spend too much time in the zone and the candles are big and strong. Look at what happened when the market retraced back to test this demand zone. As you can see, the market went up strongly. Look at another example. This is the US dollar Canadian dollar daily chart. The first supply zone is this one. It is a rally base drop. The basic candle is this pin bar. And the second supply zone is this drop base drop. Let's start with the first supply zone. As you can see, the move is quick. The market didn't spend too much time in the zone and the candle size is big. So it is a strong supply zone. Look at the second supply zone. The beginning of the move is strong and the candle size is big as well. So this is also a strong supply zone. When the market retraced back to test this supply zone, the market paused, forming a nice inside bar pattern and then moved down strongly. So this is how we evaluate the strength of the move. Remember, there are two elements that you should take into consideration: the time spent in the zone and the candle size of the move. See you in the next lesson.